What's going on, daily investors? This is the end of August portfolio Robinhood update. I have a little bit over 3,300 in my portfolio. These videos seem to be the most popular videos that you all like. Make sure to hit that like button before this video ends. And if you are new to the channel and you like stock market news, passive income, and saving money, make sure to hit that subscribe button and the bell icon. And we're starting right now. Welcome back to the channel. Mike the Investor. Hope you are having a great day. We're going to be diving into my Robinhood portfolio. But before we take a look at the performance, first I'll always go through the sales that I did for the month of August, every single stock that I sold, and then we're going to dive into the performance of my portfolio. If you want to skip to the good stuff, which is all of the holdings in my portfolio, go ahead and take a look down in the comment section. I will have a timestamp on each section of this video. Let's go. First stock I sold for the month of August on August 5th was Shaw Communications. This is the third largest telecommunication company in Canada. I decided to sell them. I do like Shaw Communications and I was raving about them about a couple months ago, but I just decided to sell them and put my money in better holdings. And when you see my full portfolio, I did change some things up and I think it is a lot more stable and it is not as big. I still have 24 holdings in my portfolio. I believe it is a lot more stable. I pretty much have all blue chip stocks in my portfolio, and if they're not blue chip stocks, they are dividend growth stocks that have a lot of potential and a great track record. The next stock that I sold the next day was August 6th. I had one share of WestRock. I sold them at $35.18. Flower Foods, I sold them on August 8th. I had one share of them as well at $22.39. American Airlines, I had a total of 2 shares, but I sold both shares at different times, and I should have just sold both shares at this $28.09 because on the second share, I lost a little bit of money on. Aurora Cannabis, I sold all of my shares for right now of Aurora Cannabis. I only had 4 shares, so I didn't have a lot of money in the Aurora Cannabis stock. August 14th, 4 shares at $6.31 with a total of $25.25. And then I sold all of my shares to Ford on August 20th. I had 10 shares of Ford at the average cost of $8.95 with a total cost of $89.50. Now, I still do own Ford, but I own it in my stash portfolio. I decided to take Ford out of my Robinhood portfolio just because I wasn't giving it that much attention, and I believe it'd fit a little bit better in my stash portfolio. So if you're curious on how the stash portfolio is doing, be sure to check some of those videos out when this video ends. And the last stock that I sold was the last share of American Airlines on August 20th. One share at $25.61. So I lost a couple dollars compared to when I sold the first share at $28.09. But that is my sales for the month of August. Let's go ahead and take a look at how the portfolio has been performing with all of the crazy things that's been going in the stock market. How has your portfolio been doing for the entire month of August? Let me know down in the comment section, and let's go ahead and dive into this. So on the day the market is closed, I was up $17.56, which is 0.53%. After hours, I was up $1.66, which is 0.05%. On the week, I am up 72 cents, which is just 0.02%. So I'm starting to gain back a little of the profit that I lost. We go over to the month, you can see I am down almost 3% of my portfolio, which is $98.80, which is 2.87%. The 3-month mark, I am up $11.67, which is 0.35%. The 1-year mark, I am up $7.54, which is 0.23%. All time, I am up $3.42, which is 0.10% of my portfolio. And my buying power, I just have $12.03. So as we scroll down to the portfolio, Procter & Gamble, one of my favorite holdings in the portfolio. I only have 2 shares, average cost $109.98. My equity is $242.36. It is 7.28% of my portfolio, and my total return is $22.40, which is 10.18%. We move over to Coca-Cola. I had 2 shares. of Coca-Cola at the average cost of $50.57 at $110.06 equity. It is 3.31% of my portfolio with a total return of $8.92, which is 8.82%. ABM, also have 2 shares of ABM, average cost $39.27. My equity is $74.16, and it is just 2.23% of my portfolio. My total return, I am down $4.38, which is equivalent to 5.57%. Leggett & Platt, ticker symbol LEG. I have 2 shares of Leggett & Platt at the average cost of $37.64. My equity is $74.52, and it is 2.24% of my portfolio, and I am just down 76 cents on my total return, which is equivalent to 1.01%. Now, quick side note, Leggett & Platt will become a dividend king in 3 years as long as they keep raising their dividend, and I believe they will. They are a very strong company in my personal opinion. I do plan to keep adding to Leggett & Platt as well, and I've been holding Leggett & Platt for a little bit now. I've been holding them since June 25th is when I bought both of my shares of Leggett & Platt, and I haven't purchased any more since then, but I do plan to add a little bit more in since it is close to my average cost now. The next stock will be AT&T, ticker symbol T. AT&T has been on a tear lately. I had 5 shares at the average cost of $31.25. My equity is $175.75, and it is 5.28% of my portfolio with a total return of $19.48, which is equivalent to 12.47%. Another solid dividend aristocrat. AT&T is very solid. I'm not going to be adding any more in right now, any single shares. If I buy into AT&T when it's over my average cost, I would like to put in a bigger order with at least 5 to 10 shares. So at this time, I won't be adding any more into AT&T. I would just be kind of taking the dividend that it pays me and reinvesting. Archer Daniels and Midland, ADM. This has been a stock that's been kind of getting some light shined on it in the news with all the crops and everything like that from overseas and things like that. I had 4 shares at the average cost of $39.02. My equity is $150.92. It is 4.53%. Total return, I am down $5.15, which is equivalent to 3.30%. ADM is another dividend aristocrat in my portfolio. Altria is technically a dividend aristocrat, will be becoming a dividend king as well. I had 3 shares of Altria, and Altria has been having a ton of feedback in the media. Also with the merger with Philip Morris, I also think that's going to be a great incentive for shareholders in my personal opinion, and I will be taking advantage of this dip as well. Once my next deposit goes into Robinhood, I will be adding some more of Altria to my portfolio. So I had 3 shares at the average cost of $49.13. The equity is $132.75, and my portfolio diversity is just right at the 4%. And my total return, I am down $14.65, which is equivalent to 9.94%. So I believe that is all of my dividend aristocrat and dividend kings, and that is correct. So now we're going to move down to some of my other dividend growth stocks in my portfolio. So Procter & Gamble, Coca-Cola, ABM, those 3 are dividend kings. Leggett & Platt, AT&T, ADM, Altria, those are all dividend aristocrats in my portfolio. So that's why I have them at the very top of my portfolio. I don't have them organized by sector or anything like that. I just kind of have them organized from dividend growth years and kind of my strongest companies in my portfolio. So now we move down to some of the other stocks. UPS, I had UPS on my watch list for the month of August. So if you've seen that video, I did a very brief overview on some of the reasons on why I felt UPS was a very good buy. I only bought 1 share at the average cost of $114.69. My equity is $118.37. It is 3.55% of my portfolio, and I am up $3.68, which is 3.21%. So not bad so far on UPS. And I have a dividend pending, I believe, for the month of September already. So that is pretty cool. They pay almost about $1 per share per quarter. So that's not bad at all. We move over to Starbucks. We all know Starbucks has been on a tear. Really wish I would have bought in at a lower average cost, but I'm happy that I at least own the one share that I have at the average cost of $88.70. My equity is $97.70, and my portfolio diversity is 2.93%, and I am up an even $9 on Starbucks, which is equivalent to 10.15%. So Starbucks is on a tear. They're going to hit that $100 mark before the year is out, in my personal opinion. That's what I'm thinking, because all the commotion in the stock market did not faze Starbucks, and the CEO also just put out a statement stating that Starbucks is firing on all cylinders. So he has no doubt on their revenue and anything like that moving forward. So that is a confidence builder to shareholders and people that's looking to invest in Starbucks as well. Bank of America. I have 8 shares of Bank of America. My average cost is $27.16. My equity is $218.32. My portfolio diversity is 6.56%, and I am just up $1.08, which is equivalent to 0.50%. So I have been taking advantage of the dip of Bank of America as well, and I will be adding some more shares in as long as Bank of America stays closer to my average cost. Pfizer is another company I've been taking advantage of this huge dip. This is the #1 company I've been buying in my portfolio. So if you're wondering why the portfolio diversity is up to almost 9 and 10%, that is the reason why. But I believe Pfizer is going to be okay. I don't have any doubt in my mind about Pfizer. I'm going to take advantage of this dip. And this is a massive healthcare company, and they're going through a little shaky time with the merger with Mylan and everything like that. But the healthcare sector is strong, and I believe Pfizer is still going to be there when the smoke clears. I have 8 shares at the average cost of $39.71. So you can see I am down quite a bit on Pfizer. This is actually the position I am down the most on, if I am correct. My equity is $283.60. My portfolio diversity is 8.52%. My total return, I am down $34.11, which is equivalent to 10.74%. So I am down quite a bit on Pfizer, but I'm going to keep buying in and averaging my cost down, because my current cost, I was up at $42 on my average cost, and I've lowered that down to around $3. So that's pretty cool, and I'm going to keep dropping that cost down. So that's the beauty of dollar cost averaging. Sony, I still have 1 share of Sony, my lonely share, but it is doing really well. Average cost is $47.78. My equity is $56.72. My portfolio diversity is 1.70, and my total return is $8.94, which is equivalent to 18.71%. So Sony is doing some pretty big things. They did just buy back the rights of Spider-Man from Marvel, so the Marvel fan community has been going absolutely crazy. I'm a big Marvel and DC fan myself. I don't know if you are, but if you are a Marvel and DC fan, go ahead and hit that like button for me and drop something down in the comment section. Who's your favorite superhero, or who's your favorite villain? Realty Income. I still have 2 shares of Realty Income. I'm waiting for them to drop down a little bit lower to that average cost. They have been on a tear lately as well. My average cost is $68.51 on the 2 shares. My equity is $147.86, and my portfolio diversity is 4.44%. My total return is $10.84, which is equivalent to 7.91%. So not bad on Realty Income. Also with the monthly paying stock, very strong company, one of the best REITs in my personal opinion in the stock market that pays monthly. Stag Industrials. is another monthly paying stock in my portfolio. It is a REIT. I have 5 shares at the average cost of $29.76. My equity is $147.10. My portfolio diversity is 4.42%. My total return, I'm down just a little bit, $1.70, which is equivalent to 1.14%. Main Street Capital has been doing really well lately. They have been on a tear, moving up in stock price. I have 2 shares at the average cost of $40.20. My equity is $87.78, and my portfolio diversity is 2.64%. My total return is $7.39, which is equivalent to 9.19%, which is also a monthly paying company, which is a BDC, business development company, which pays a very nice monthly dividend as well. Ticker symbol APLE, Apple Hospitality REIT. I had 10 shares at the average cost of $15.95. My equity is $158.20. My portfolio diversity is 4.75%. My total return, I am down $1.34, which is equivalent to 0.84%. HP, I had 5 shares. They've dropped a little bit down with the commotion and the taxes on the imports for technology and things like that. My average cost is $18.74. My equity is $90.45. My portfolio diversity is 2.72%. My total return, I am down $3.26, which is equivalent to 3.48%. So I am down a little bit, and I think this is actually a pretty good buying point right now. Their 52-week low is $17.10, and I believe they will struggle a little bit until all the trade war things get completely handled, but I think it gives a great point to start buying into this company because they have been growing their dividend as well over the past 4 to 5 years. So this is a very undervalued growth tech company in my personal opinion, and this is why I purchased them a while ago, because I think they have a lot of potential growth in the upcoming years, and I think they're going to make a lot of noise and surprise a lot of people. PetMed Express, probably one of the most popular stocks in my portfolio. I'm going to keep holding on to this because I have faith in PetMed Express. I had 10 shares at the average cost of $15.82. My equity is $155. My portfolio diversity is 4.65%. I am down $3.15, which is equivalent to 1.99%. So PetMed Express has been going between $15 to $16 over this past month with all the volatility going on in the stock market, but a very solid company in my opinion, and actually has been one of the more stable companies when the stock market has been going down on the real bad days. AES Corporation, I'm down a little bit on them as well. I have 10 shares at the average cost of $16.05. My equity is $151.20. My portfolio diversity is 4.54%. I am down $9.30, which is equivalent to 5.79%. And we move over to the last stock in my portfolio, Aqua America, ticker symbol WTR. I just have the 1 share at the average cost $39.86. My equity is $44.38. My portfolio diversity is just 1.33%. My total return is $4.52, which is equivalent to 11.34%. So that is pretty incredible just on that 1 share. I do want to add more in of Aqua America, but I wanted to come down closer to my average cost just because I think it is a little bit overvalued at that price right now. Once it drops down a little bit, I will be looking to add a little bit more into Aqua America. So that is the last stocks of my portfolio. And now we go to the 4 ETFs in my portfolio that I own. SPHD Power Shares S&P 500 High Dividend Low Volatility ETF. This is a very popular monthly ETF that a lot of people own as well. They also have been growing their dividend each year, which has been pretty crazy for an ETF. I just have 2 shares at the average cost of $41.93. My equity is $80.82. Portfolio diversity is 2.43%. I am down $3.04, which is equivalent to 3.63%. And I'm not worried about SPHD. I think this is a very great buying point right now. So I am looking to add a little bit more into SPHD as well. And that is the good thing when prices drop in the stock market. You have so many great options to add to your current holdings at a better price. So you get a bigger bang for your bucks. That's why I've not been complaining about the stock market going down. I've just been trying to add the best position at that time. SPYD, this is the only ETF in my portfolio out of the 4 that does not pay monthly. This ETF pays quarterly, months 3, 6, 9, and 12. SPDR portfolio, S&P 500 high dividend ETF. I had 4 shares at the average cost $36.44. My equity is $143.68. My portfolio diversity is 4.31%. My total return, I am down $2.09, which is equivalent to 1.43%. We move over to the last monthly paying ETFs in my portfolio, SDIV, Global X Super Dividend ETF. I have 10 shares at the average cost of $17.18. So I am down a little bit on SDIV. My equity is $162.20. My portfolio diversity is 4.87%. And my total return, I am down $9.60, which is equivalent to 5.59%. Last ETF in the portfolio would be DIV, Global X Super Dividend US ETF. I had 10 shares at the average cost $22.47. My equity is $226. My portfolio diversity is 6.79%. I am up $1.30, which is equivalent to 0.58%. And this ETF actually has been holding up pretty well during the commotion here in the stock market. So as you can go over to the month, which is not a lot of volatility with everything that was going on with the talks of recession and everything like that. So that's why it's nice to kind of have a little bit of diversity in your portfolio so you can withstand some of those bear markets. But I'm going to scroll up so you can see all of my holdings in my portfolio. Let me know down in the comment section which holding is your favorite or which one you think is the best pick in my portfolio. I'm very curious on what you guys think about my Robinhood portfolio. This seems to be the most popular video that I make that gets the most traction. So be sure to hit that like button, hit the subscribe button so you don't miss any more content like this. Stay inspired, stay motivated, and I will see you guys back next time.